Welcome to Chai Pe Kharcha, where we have conversations on personal finance among four NRI professionals working at tech firms. Think of these like water cooler chats you have at the office. Only this time, you will have Ishan, Madhvesh, Rohit, and Siddharth as colleagues you will be listening into. Before we get started, a quick disclaimer. We are not financial experts. The content provided in this podcast is for informational and educational purposes only. Always consult with a qualified financial professional if you need financial advice.
Hello and welcome to Chai Pe Kharcha. We don't have a full house today. We have a very small group together in search of our NRIs spread across the world in different parts. We have finally reached the exotic location of Prague, city of castles and bridges, and host to our guest, Gayathri. Welcome, Gayathri, to the podcast.
Hey.
Gayathri, we generally do this in the podcast and trying to understand more about you, what your journey has been through life, your relationship with money, and also then to explore what happens in the city of Prague. How is the kharcha in the city of Prague, and how you've managed the transition of moving from India to another place, difficulties, good things that have happened. And you especially have a different experience because you've moved there with kids. There is obviously difficulties that you've probably seen that a lot of others may not have.
So about me, I've got a very simple career. I'm currently working with one of the aerospace giants as their manufacturing IT leader. I've spent about 18 years in the industry, various industries, trying to do a lot of different digital transformations. So that's been my focus so far. And I've worked across different locations, different geographies, and Europe is one of the places where I've always wanted to live. So that's been, and I've been in Prague for 7-8 months now, almost a year, I would say. And it's been great so far, right from finding a house to kids. And it's just been me and the kids. We're still trying to figure out how we want to completely relocate and live together as a family. It's still a work in process because jobs at the moment take twice as much time as it was taking a couple of years ago, right? So yeah, neither one of us want to let go of the opportunity that we had. And plus, the primary reason why I wanted to move here was my daughter was absolutely interested in thinking med school as an opportunity and as a field of study for her. So, and we're better than, cheap education, which is a myth. And let's get into that a little later. But yeah, cheap education somewhere, and we're here now. And it's been great so far.
So you've obviously been through, in the last 18 years, a lot of different phases of life, being a single person who was working, getting married, having kids, and then having to move with both you wanting to move to Europe and your kids' education plans. So how has your relationship with money evolved? You were a kid yourself when you were getting some pocket money, and then you have to decide what to do with it.
I'm not of that generation.
No pocket
where,
money?
money was common. It used to be only for the rich and bougie people. It's not most definitely for middle class household where you're growing up. You want something, you get it if it's within the budget. Otherwise, you're not going to get it. So yeah, pocket money is probably the term that I would do for my kids, which again, they're not getting it on a regular basis. It's more of a work dependent on how you performed in the past month with your chores and other factors. So there's a huge discussion and we have how much do you earn for the pocket money kind of thing.
That's the money lesson, I would say.
And I think my kids have better money lesson and mind in terms of how they want to manage money better than me for young people. My daughter's barely 13 and my son is 7. And there was a discussion we were having about going out for lunch or dinner a couple of days ago because of Valentine's Day, Rose Day, and all the other fads that's happening right now in Europe. So my kids, it's a simple thing. I would take pride in saying that I've done as an achievement, where my children are looking at the cost of money, cost of a meal for a person if you're going to a restaurant, which is, I'm not going to say it's fancy, but at the same time, it's not McDonald's kind of a thing. They're comparing the prices of the meal plus, what is it going to take for each of the ingredients and how much chore is required. And they've noted down the cost of the time as well, because every hour that you spend can be translated roughly into money. So they did say this, and they said you're going to spend roughly 2,000 Czech crowns, which is the Prague money. And while we can have this meal with this juice and we're ready to pitch in, and they went and brought the ingredients, and my daughter did the prep work while I did the main meal. And we all had it was nice. And we achieved the same thing in 300 or 400 Czech crowns. And it was a family activity for us. And the cleaning up was done by the younger one. So, and so I've seen my children talk about how much they want to spend on a pizza and how much do they want to spend in a McDonald's meal. They talk about whether it's worthy to buy a McDonald's meal or whether to save it up and buy something really useful in terms of Legos. And they've also come back, and we have this discussion now because I'm inculcating the reading habit. They said, okay, we want that book. And here again in Prague, you don't get too many English books. So they say, I'm ready to pay you that and get me that book. So it's a circle of investment, which I think I've taught them well. But to get back to the original question, when did you start investing? I started when I was 22. The culture that we grew up, and especially from the generation I am, parents start the investments a little later, given that they're taking care of so many X, Y, Zs, and then there's marriages for the brother, marriages for the sister, all those things. By the time they start investing in money, could be as simple as 100 rupees or, anything. They think about it in their mid or late 30s. So one of the most important things that was a life lesson that I learned is I'm not going to wait for big things to happen. I'm going to start saving a percentage of my salary, going to make a difference. And when I started talking about the early 2000s here, so the salary was around 17,000 rupees. And the target was save 2,000 rupees every month. 22-year-old who's all alone herself, who's never been out. The first thing I did was to take that money out and put it into a SIP for 2,000. One of the things that I did as a strategy was with every hike that came in, adding 10 or 15% to the initial SIP. And it was a systematic thing. And I think by 25 or so, I realized SIP is just going to be ridiculous. So I bought my house, the first house in Chennai at the age of 25. I have refinanced it, bought another property, and a couple of other things. So right now, I can retire comfortably back at home with whatever rent money is being generated and live for the next 30, 40 years. And I'm not talking about cutting back on my lifestyle. I'm not talking about saying, hey, I'm not going to take a travel. Every quarter, I want to travel somewhere. So I'm not saying that I'm going to cut back on everything and I'm just going to live from whatever is coming in. I mean, 40,000 feet level of what I've done so far. Yeah.
And that's very interesting because we've spoken about investment into stocks and funds. Real estate is a topic that's very recently started coming up. And you saw the rate of return, some in SIP versus in real estate. So did you stop the SIP or did you keep that going, but also buy?
See, the smart person will always have diversified.
Right.
So you're never supposed to have all eggs in a basket. It's the way you build friendship, nurture relationships, build financial independence or freedom. So I have stocks. I have SIPs. I have a couple of properties. I have stocks in terms of some of the company shares, which I got when I was working for the top FMCGs of the world. I do have those shares and they're growing at a phenomenal rate. And I do have commodity exchange as well, which I play from day to day, sometimes when I have a little bit of band. So commodities is another top thing. Forex is something that it's a double-edged sword in my opinion. It can crash anytime. That's one thing I have in my head every time I talk about stocks, every time I talk about SIPs. And it's alarming a rate of growth, especially with the current market trends. You're talking about losing jobs, people not spending, the lipstick effect where indulgences, the little indulgences that people want to do, they're cutting back on those. How come your stock market is bullish every day? So those are some of the things that, you want to correlate and you're still thinking, why? So the safest bets that I have significant amount of gold that I invested in. Real estate is still, in my opinion, you need to be careful. If you are coming from a corporate background, the price at which you're going to buy versus a price at which somebody else is going to buy who's not into the real estate, they're going to have a completely different thing. And India is a very unregulated market when it comes to real estate. And I'm seeing the trends. I've been studying the real estate market in Europe as well. So you're down the lane, I might buy a couple of properties in Prague if all goes well.
It ties back into another conversation. Padvish, I'll let you ask your question and then I have some more, right?
My question was towards the experience starting from a SIP and then going towards real estate and diversifying across stocks, goals, etc. Can you also talk about your learning journey? How did you acquire knowledge throughout these phases? What actually helped you to pivot and diversify? You also talked about forex trading, which is not quite common from our guests at least. So can you talk more about
Sure.
this journey there?
Sure, absolutely. So I'm a traditional South Indian. So one of the common things that South Indians have, and they take pride in, is their. So that's a no-brainer, right? I mean, every woman will be given some amount of gold. And if you meet the aunties of our generation or, they all talk about how much jewelry you can wear to a particular wedding or something like that. It's not the silk, it's gold that talks in South India. One of the things I've learned is gold is a lifesaver, and you don't have to buy it in terms of jewelry. You can buy it, and that's the beauty of today's market. You can still buy gold as a commodity, or you can buy it as a fixed gold bond. If you are an Indian, you can just buy it as gold bars if you know how to save it and store it at home without having to worry about the burglars and other things. So you have a variety of ways where you can buy. And it is very easy. If you're going to buy an online gold, you can spend as small as 100 rupees. So during the time when I was going through a lot of emotional, traumas and things like that, I had these little indulgences where I used to go to a Starbucks and buy a coffee. So one of the funny things that I used to do is, if I can afford a 300 rupees Starbucks, I can afford to buy 300 rupees of gold on an online for the same value. So whatever I was indulging as something for myself, that's nice. Coffee is great. Or, you just go buy a dress. Great, fancy, beautiful. But if you can invest the same thing in an online gold thing, if I'm spending 400 rupees behind something that is indulgent, 400 rupees, that was also equally indulgent at that point of time. So 400 rupees used to go into that particular online gold, whatever was the rate that day, just buy. And the other thing that as a South Indian, I learned, house. They talk about it. Most of them think about buying a house at the age of 30, 35, 40. That used to be the average age. But buy a house and refinance that. Buy another house. You don't have to live in it, but you do get a significant amount of rent at some point of time, say 20 years down the lane, when your goal is to have the same life as you had before the retirement. So it's simple South Indian principles of buying a house, buying gold, and those little commodities, which they say is an indulgence, on a daily basis. I don't know the number of days I've simply gone ahead, I just want to buy gold. I just want to buy silver. Or right now, another thing that I'm noticing, and I'm from the aerospace industry, and if it would be dumb for me if I was not looking at sustainable, you know, co- commodities in terms of how you're going to have fuels. So crude oil is another thing that's really, really interesting, right? You have a bullish market on many days where you can sell those commodities and make a good amount of profit. And there are days where a barrel of crude oil drops to $40, $30. And that's the day you invest, you buy and sell. So yeah, that's simple.
Yeah.
And
Yeah, there are like a lot of topics that you touched upon in terms of financial discipline, being frugal, and also one more important thing of
hey,
like
I'm
being in
always
a great
frugal. So I'm always frugal. If you come to me, if you come to my house, and if you meet my kids, you're not gonna say like, this lady has lived a frugal life. By the looks of it, I'm not frugal, but yeah, I know what to do, when to do, and that's the discipline that is required. It's gonna bite you sometimes. Sometimes I've had 300 rupees in my account because I've splurged quite a bit, but I know those splurgings have given money. And you don't buy a lifestyle first. You buy assets, you buy commodities, you buy the right kind of investments, and then you go in for a lifestyle.
Yeah, completely agree. Being frugal in a positive way is like really important to build. When else even if your income is really high, you will not be able to do well.
And
So yeah.
that's a common problem that I'm seeing with a lot of people, especially the millennials, right? You're stuck. You're a sandwich generation, and we're a sandwich generation, to be very honest, where you want to do all things your parents did at the same time, have all the fun that your Gen Zs and Gen Alphas are doing, because you somewhere feel like you're living in the FOMO effect, where you just want to live your life at the same time. You want to save, build house, and you might be getting a fancy ass paycheck like 5 times or 7 times or 10 times than your parents did, but they never gave you the financial wisdom as to how they were managing house in such a small money. And if you look at our ancestors, they were fantastic. For example, I learned quite a bit from my grandmother. My grandmother lost her husband when she was pretty young. So I would say she was in her late 30s. She had 5 children. She had to send them. And she was getting only the pension of a railway master or, TTE. And she had to manage 5 kids, put them through college, get them all married, and those kind of things. And build a house and so many other things, right? And she did a fantastic job. So yeah.
So one question I had, Gayathri, and thanks for sharing it. These are great insights, also kind of pointing out how your upbringing and the experiences you have while you're from what you see around you shapes how you become. So I can easily blame my parents for my bad finances. But more importantly,
Absolutely. That's again a very bad thing that you want to do. You should learn from the negatives of your
I know.
parents, not really. Yeah.
So that's exactly why
They
we're
are the
doing this.
job raising you and keeping you alive, and points to that.
I know. So I'm learning from the good there, and I'm learning from other people as well. But I had a question on something you said, which was very interesting to me. So I agree with you. Most people, our generation, and even now, like right now, a lot of people can't afford housing. But a lot of people from our generation also start thinking about housing how did you, one, come up with the idea that at 25, I want to buy a house now? And two more, and the most important question that I'm sure anyone listening to this would have, how did you manage to do it at the age of 25? I'm sure you didn't have lots of money lying around at that time.
That's where the gold comes.
I'll just add one more question to that. Would you do the same thing if you are at 25 old?
Oh, yes. I think I would probably be a little more smarter. Probably invest a little more in gold. When I was 25, the race of gold was so less. And today, the same thing is 5 times, 6 times, 10 times. I don't know the stats. So, yeah, I would do it any time of the day at a heartbeat. So, 25, it was always something that I wanted. I wanted a place of my own, wanted my name in it. And I don't know, it was always something that, I wanted or I dreamt of it right from 10, 12, when most girls are thinking about a house. I want to get married in this way. No, I wanted to have a house. I wanted to have a big ass fancy bougie car. And, it all comes from being extremely ambitious, I would say. And first thing I said to myself, okay, I have this gold. If I pawn it in a bank, I'm going to get a capital to buy a house. On, it was a choice between buying a house and going for an MBA. I had a good score at the time, 710 in GMAT, and NUS was ready to give me a seat. It was a thought. Do I do an MBA? Does it really matter? Or, yeah, it still comes. But I said, okay, why don't I spend that money and buy my house, the first house? And that's where I said, okay, let's build an asset. An MBA can always be got when the company that I work for can always sponsor me and I don't have to spend money. And I spent the money on buying a house. That's it. So I pawned my jewelry. So I think I pawned it for 7 weeks or something at that time, which was the 20% that was required, mandatory capital to raise. And I bought my first house. And that's a self-sustaining property at the moment where, the rent comes in and the EMI is paid off. And I'm actually making a profit out of that property at the moment with some 8,000-9,000 rupees in hand, which is not bad. And that's 8,000-9,000 rupees that goes into the SIP that I was talking about. So it's all an endless circle. And I'm not really seeing the money, but I think at one point of time, I might see the money.
Yeah, that's great to know. Just to expand my previous question, right? Like now, back then, I feel like the houses were more affordable. Of course, under $25 income, it's not as easy as I sound it to be.
Well,
But
it's never going to be easy.
yeah,
It's
but
never
now,
going to be easy no matter what. But yeah,
yeah,
I know what you're saying. The property prices have risen. It's become crazy. The market is
yeah,
inflated. Yes,
yeah,
I am with you. And I know that we might be the only generation where a lot of people cannot afford to buy a house. And that's the stark reality of it. And it's not just in India. It's also in the US. It's also in the European regions. I've met quite a few of people where, we're not able to afford to buy a house.
yeah. So
Yes,
in
with it.
in terms of your gains, right? Like, would you take the same decisions now because the rental yield is not going to be great? Let's say if you are going to buy a 1 crore property, you are not going to even get like 10,000-15,000 in rent.
Who said,
So
are you telling me you spend 1 crore and you're not going to get 10,000 rupees as rent?
unless you get a very good locality.
I mean, are you talking about buying a house in Kanyakumari or
Just in
Kashmir?
general on average,
No, I'm
right?
asking you because typically any person with you buy 1 crore property, the average rent prices in Bangalore, in Chennai and Pune, and I don't know. I'm not very well versed with the Delhi market or Kolkata market, but Mumbai, Pune, Bangalore, Chennai, the average rent is 40,000 rupees for a 2 BHK. And I'm talking, if you're talking about a bougie area like Indranagar or those are common names across all the cities, right? So Indranagar or, those kind of areas, you are talking about 70,000 rupees, 80,000 rupees in terms of rent.
So in summary, that you would again take that decision of
Of course,
percent.
no, it's going to be a choice for me. Do I want to dine at Taj or buy a house? It's simple. And that's it.
So you invested a lot initially because, even to get the capital to buy the house, you invested a lot initially in gold, then you invested in the house. Now you're kind of getting
The gold
into,
was invested, and I think it's a very I mean, it's a South Indian thing. I got it from my
Got it.
mom.
Okay.
And see, when you get married, the first thing that you get certain amount of gold as a South Indian, and that's the biggest capital
That you can
anybody
start.
can. Yes, and I think Infosys started with Sudhamurthy's gold. That's just a story.
Okay. So now I'll kind of go back to Malvesh's question because even I have that question. So I agree with you that you still probably make sense to make that call because rental incomes, especially in the major metros, are definitely going up. Whenever we talk about going back to India, that is a big question for us depending on where we would settle because rents are insane up. So how would you, like, if you were to buy today, if you were to buy a house today, obviously, like you said, Indranagar or whichever the main localities are, or the main residential areas are,
I cannot
they-
buy a house there. It's like 4 crores, 5
So,
crores. I'm not
e-
sure.
even when you bought your house, I'm assuming you didn't buy it in the heart of Chennai. You had to go slightly out because, or at least in the upcoming areas, or in those areas of Chennai, to
Yeah,
be able to
so
afford the
speaking of
house.
perspective, I did buy it in Toraipakkam, which was not Adyar, with Rivanmure. But yeah, I did buy it but today's date, I'm talking about a 30 lakh property. It's what? I think it's fair to say it's 15, 16, 17 years ago, maybe. And it, property's value is about 80 lakhs or 90 lakhs. And I'm not even talking about the fancy ass apartments that's there. And one of the things you need to understand is when you invest in the fancy ass apartments, the overheads also come in.
Yeah.
You might be able to afford Hiranandanis. You might be able to afford Ramaniyams in Chennai. They're one of the best builders. But overhead we're talking about is cheap. How do you cut your overhead? That's where the problem is. It's not really buying the house. It's the overhead that your flats bring in. It's the overheads that your maintenance of a particular house.
Yeah.
That's where you need to make the right investment. You cannot you cannot compromise on the quality of the build. You cannot afford to compromise on the quality of the land and all of those things, construction materials. There's a lot of engineering that goes behind it. You cannot afford to make those mistakes. But if you're able to find that was able to build a certain house at a particular cost price that you're looking at, you will be able to. It requires a lot of analysis. It requires a lot of site visits. It requires a lot of looking at the cement to a lot of things in terms of research. But once you're going to be able to. So it took me 6 months when I said, okay, no MBA, I'm going to buy a house. It took me 6 months from that day to finally close down on flat. So it's
Okay.
a 6 months worth of work that I did on a daily basis.
This is the end of part 1 of the episode. We will continue next week with part 2. Thank you for listening in and stay tuned.